In this video, we're going to take a look at the 2022 Junior Cycle Business Studies Final Accounts question. And in this here, it was question 17, which is a long question. So we'll get started. So it says, the following trial balance was taken from the books of Cadden Limited on the 31st of the 12th, 2021, the end of its financial year. The authorised share capital is 400,000 €1 ordinary shares. So that basically means that they are allowed to sell up to 400,000 shares. Okay, a trial balance. This is a trial balance. It's a list of all of the balances at the end of the year. So you can see there they've got cash sales, cash purchases, carriage inwards, stock on the 1st of the 1st, telephone and broadband, light and heat, rent, wages, marketing expenses, dividends paid, buildings, equipment, cash in hand, debtors, creditors, bank overdraft, issued share capital, profit and loss balance on the 1st of the 1st, and a 9-year loan. And it says then the following additional information is provided on the 31st of the 12th, 2021, so at the end of the year. Stock at the 31st of the 12th, so closing stock, €5,000, and then equipment to be depreciated by 20%. So what you are asked to do, you are asked to do an income statement and a statement of financial position. So this is the income statement here and statement of financial position here. So what we have to do, we just have to take all of the figures from here and put them in to either the income statement or statement of financial position. And we also have to put these figures here into both the income statement and statement of financial position. Now, how do we choose which account to put them in? Well, the income statement is where revenues and expenses go. So revenues and expenses go into the income statement, and an income statement helps us calculate how much profit or loss did the business make that year. And then the statement of financial position is where assets and liabilities go. Okay, so we'll get started. If you want to take the question, you can see that they already had some items entered in here. Okay, so you had used the sales, the opening stock, purchases, carriage inwards, which is just transport of the goods into the business, took away the closing stock, the cost of goods sold was 169, and then that gives us a gross profit of 103. So that's a gross profit. We will have to finish the rest of the income statement and then complete the statement of financial position fully as well. So, as you saw, sales, purchases, carriage inwards, opening stock, and closing stock down the bottom were already used. We're going to decide where everything else goes. So, telephone and broadband is an expense, so that'll go into the income statement. Light and heat is an expense, so that'll go into the income statement. Rent is an expense, that'll go into the income statement. Wages is an expense, that'll go into the income statement. Marketing expenses is an expense, that'll go into the income statement. Dividends paid, that is taken away from the net profit figure. That is money that is given to shareholders. Okay, so it's their part of the profit, and so that's going to be taken away in the income statement. Buildings are an asset, so that'll go into the statement of financial position. Equipment is an asset, that'll go into the statement of financial position. Cash in hand, statement of financial position, because that's an asset as well. Debtors are people that owe you money because you have sold them goods on credit, which means that you give them the goods and then they'll pay you later. So that's a current asset which goes into the statement of financial position. Creditors are people who sell you goods on credit, so they will give you the goods now and then they will demand payment later. So you owe them money. So they go into the statement of financial position. A bank overdraft is when your bank allows you to take out more money than what you already have in it. So that goes into the statement of financial position. That is a liability. That is something that you owe. So again, assets are things that a business owns. Liabilities are things that a business owes. Issued share capital, that is a liability. So you owe that money back to the shareholders. So that is the amount of money that has been invested into this business, and the business owes that back to the owners. Profit and loss balance on the first, we're going to add that in the income statement, and then a 9-year loan, you owe that to a bank or whatever financial institution you took that from. That is a liability that's going to go into the statement of financial position. Then we have the information at the bottom. So you saw that they already have the closing stock put into the income statement, but we also will have to put it into the statement of financial position because that is going to be an asset, something that they own at the end of the year. And then equipment to be depreciated by 20%. So equipment depreciation is an expense in the income statement, and then it is also taken away up in the fixed assets at the top of the balance sheet. So just a reminder that everything in the trial balance goes into either the income statement or statement of financial position, but the additional information goes into both of them. It goes into the income statement and the statement of financial position. So don't forget that. Right. So here we are. You saw that they had already calculated the gross profit here. Okay, so first thing that we'll do, we'll write our less expenses heading. So we're going to look back over to our trial balance now, and we're going to look at the next item that we haven't ticked off. So you'll see the first one there is telephone and broadband, €2,500. And it's a good idea to tick items off as you have entered them so that you know that you've put everything in. Light and heat then, €11,500. Rent, €16,000. Wages, €43,500. Marketing expenses, €8,800. And then next we've got dividends paid. Now that's not an expense. We're going to take that away from the net profit whenever we have that entered. Now the next item then, down below for income statement, as you can see, profit and loss balance, and we're going to leave that to the very end as well. But down below in the additional information, equipment to be depreciated. So we're going to put equipment depreciation in the expenses because that is an expense. So 40,000 multiplied by 20% is €8,000. So depreciation equipment, €8,000. And that gives us expenses, sum total there, 90,300, which we will then take away from the 103,000 gross profit, and that will give us a net profit of €12,700. Then we're going to take away our dividends. So that is the money that the business pays to their shareholders as a thank you for investing in the business. So it's a part of the company's profits that they give to the shareholders. That gives us €2,700 there. Then what we do, we add our profit and loss balance from the start of the year, which is €17,000, and then we have 19,700 then is our P&L balance at the end of the year. So that is all, as you can see there, that's all of our income statement items ticked off. And so I'll just go back to that, okay, and you'll see that that is the P&L complete. Okay, so again, very good idea to write IS or write SFP beside the items and just tick them off. So remember again, everything here should be entered one time into either the income statement or statement of financial position. Everything down below has to go into both. Okay, so let's move on then, statement of financial position. All right, so this is where the business puts its assets and liabilities at the end of the year. What we do though, we split the assets and the liabilities into long-term assets, which are our fixed assets. They are assets that we will hold for longer than 1 year. And we have 3 headings here. So we have a heading for the cost, a heading for the depreciation, and a heading for the net book value. So buildings, 220,000, zero depreciation, gives us a net book value of 220,000. Then we have equipment, 40,000, and remember our 8,000 from down below, 8,000 that we had there in the income statement. So therefore we have a net book value in the equipment of 32,000 euro. We have to top them all up. So we're going to have 260,000 is the total for the cost, 8,000 is the total for the depreciation, and 252,000 is the total for the net book value. Our next heading then is our current assets. These are our assets that are likely to change within the next year. So things that we own that we probably mightn't own the same ones next year. Okay, so if we look back to our trial balance, we see we left off here cash at hand. So cash at hand is a current asset. So cash 5700. Then we have our debtors. So remember, debtors are people that we sell goods on credit to. So we give them the goods now and then they owe us money later. So they owe us something, that is something that we own. So 12,000 euro then. Then, if you remember, I said that we had all the items down the bottom. We had to enter these twice. So into the statement of financial position, we're going to put our closing stock because at the end of the year, we own that closing stock. All right, so you tot up your current assets then. 22,700 euro is the total of your current assets. Then the next heading is creditors, amounts falling due within 1 year. So these are your current liabilities. So this is just another fancy word for the things that we owe that we're going to owe back in the next year. All right. So where did we leave off in the trial balance? You'll see the creditors is next. So creditors are people that you owe money to because they have sold you goods on credit. They have given you goods, you've walked out with the goods, and you are going to pay them at a later date. So you owe the creditors. And then you've got bank overdraft. So the bank has let you take out more money than what you actually have in your account. So that's 5,000 euro there. So altogether, that's 14,000 euro are your current liabilities. You're going to take that away from your current assets. So you take your current assets away from, or sorry, your current liabilities away from your current assets, and that gives you your working capital figure. So your working capital figure is your current assets minus your current liabilities. And this is the day-to-day money that the business has. And they have a nice bit of money there. So that's really good. So they have money. Super. What you're going to do then, you're going to add that to your total net assets. And then that gives you, your total fixed assets. And that gives you your total net assets of 260,700 euro. Okay, so in accounting, you're going to know, in bookkeeping for junior cycle, you're going to know that you're correct if your total net assets and your capital employed is the same figure. So your capital employed is all of your money that's going to be in the finance by section. So all of the money that has been pumped into this business. All right, so where did they get their money from? Well, they have debts that they have to pay back in after 1 year. So you can see the last item in the trial balance was a 9-year loan. And so that is debt that they're going to have to pay back in more than 1 year because it's a big debt. And so they'd be given more time to pay that back. Then you've got all of the capital. Capital is the shareholders' money that they have put into the business. And then reserve is the amount of money that has been kept in the business, so the profits that have been retained. Now, you've got 160,000 issued capital that we can see here, and then up here we have 400,000 authorized capital. So authorized capital is the amount that you are allowed to sell up to, and issued is the amount that you actually have sold. So if this company wanted to raise more money, So it's got 240,000 there that it still could sell. Selling shares could be a good way to do it. So you've got your 400,000 authorised capital and your 160,000 issued. Then you've got your P&L balance, which we got from the income statement. That was our last figure in the income statement, was €19,700. And that gives me 179,700. And then that is the capital employed, €260,700. So that is your income statement and statement of financial position of Cadden Limited as at 31st the 12th, 2021, complete.